If you're looking to position your portfolio for massive gains in 2025, this is the video you don't want to miss. I'm covering 5 undervalued stocks that are poised to crush the market in the next 12 to 24 months. These are high conviction companies that you know of. They've got strong fundamentals, strong foundations, and they're trading well below their market value right now. I'm going to cover the price targets that I have for these stocks with the catalysts that are going to put them at these prices and the exact trades that I've got on the trading platform. Please go ahead and smash that like button down below, and let's get started with one of the most consistent wealth builders in the market right now, Adobe. Adobe has built a software empire that touches everything from creative content to enterprise marketing, and it's quietly becoming a cash flow machine. More than 90% of its revenue is recurring. Margins are expanding every year, and it's aggressively buying back shares. Yet, despite all that, the stock trades at a significant discount to its 5-year average valuation, even as analysts expect double-digit earnings growth for years to come. I'm targeting 30% upside from where it's trading right now. So let's jump into the trade. All right, guys, here we are in Yahoo Finance and Adobe, ticker symbol ADBE. You can see the 52-week range is 330 to 557, and it's trading at 347 right now, so way down. And the 1-year target that they have with the analyst is 454, and they get this number from the analysis I'll show you coming up. But let's just look at the chart, going back to 2017. So I like to take a look at the long-term chart, and you can see it's trending up, and it's at the bottom of that trend. So great time to get in right now. Now, as far as the earnings history, they've had like the last 3 quarters, they beat top and bottom line earnings. And you can see the revenue and earnings growth over time. And then here's those analyst ratings. And you can see mostly all strong buys and buys. And the big deal here, 12% earnings growth. So it prints money. I'm very confident that going forward over the next several quarters, they've had like 10 straight double beats on earnings. So I don't see that not continuing. If we look at the numbers, the price to earnings right now is 15, very low for a software company like Adobe. And the PEG ratio, price to earnings to growth, is just 1. So that's excellent. Now, I want to point out the revenue, 12-month trailing, and net income, $6.96 billion. Now, what I use for my valuations, I go right here to my 3-year projection calculator, and I punch in those quarterly numbers. And here's the 12-month trailing revenue, current net income, the shares outstanding, which you can get right here. Shares, let's see, where is it? Shares outstanding, right here. Implied shares outstanding, 437. Ooh, I got to change that. 437. So let me do that. Let's just do that. That's not going to change it, but I had 472. It does lower it to 460. That's okay. All right. We're doing this real time, guys. But 460, I don't know how that changed since the last quarterly numbers, but we're still at 460. We're still at 30% upside from here going forward. But all right. So that's Adobe, the numbers. And if we go to the trading platform, I'm utilizing Tasty Trade right now. There's a link down below. Benefits if you go through my link. So check that out. And you can see the income statement, the revenue, net income increasing year over year, and balance sheet as well. So super strong fundamentals. And the gross margin, 89, almost 90% gross margins. So unbelievable. And you saw my my price target of 460. So that is where we're at. Here's what I'm doing. If we look at the table mode right now and the positions, I've got 2 put spread. I've got 4 put credit spreads in November on. I mean, you can buy the stock outright right now, and it's $346. So that's 34 grand for 100 shares. But one option contract controls 100 shares of stock. Right now, I've got 2 $10 wide put credit spreads, and I like to collect about a third the width of the strike. If we go to the curve mode and analysis, you see I'm profitable down to 350, and I've got 1,764 in extrinsic right now because it's down at 346 that I can collect as long as we stay below or above the 350, my short strike price. So a lot of extrinsic that I have there. If I were to put the trade on right now, here's what I would do. I would go to November, and if I was going to do a put credit spread, I would go probably the 335, 340. Let's see what we would need. So we can go 335, 325 and collect $3.30. So that's $330 when it's times 100 shares. And your max loss is $10 wide, so it's $670. But I would put that on. You can go to curve mode. You can see it right here. But I've got my other trades on there as well, so that's mixing in with it. But I would go ahead and place this trade right now. So I'd hit review and send and place it. But I've already got 4 sets of credit spreads on right now. If there's one company that's positioned to ride this AI wave higher, it's AMD. AMD isn't just competing. They're building the core infrastructure behind the next gen of artificial intelligence. Revenue in the data center and AI segments is surging over 50% year over year. Margins are expanding, and new product launches are expected to significantly increase market share. Yet, despite this momentum, the stock still trades at a valuation well below its growth rate, a classic setup for a long-term upside run. I'm personally targeting 30% gains into 2025 and structuring trades with bull put credit spreads and poor man's covered calls to capture premium while I wait for that breakout. So it's a high conviction AI play that's still early on in the growth curve. So let's jump into the trades. All right, guys, AMD is the next one, and 52-week range, 76 to 186. We're at 164 right now, so there's room to move to the upside to get back to those highs that we were just back in, looks like around the March time frame. We were up at 200. Wow, so it looks like this needs to be updated. First year target is 186 that they've got on here. I think that's low. We're going to be at 200 plus. And if we look at the chart, you can see trending up. We're right about in the middle at that 164. So I still see a consistent trend up, but I think this is going to accelerate and it's going to move up further with the introduction of some of these catalysts. We've got the MI350 to ramp. It's in production now, and then we've got the MI400 AI accelerator chip that's coming out next year. So that's really going to help the data center growth. And the stock is down right now due to an earnings miss, and that was due to the tariff situation and the stop that the administration put on in shipping to China on the MI308. So that's the only reason that they missed, and it still came in and almost beat. It basically met expectations. But you can see the revenue and earnings growth, and then the analyst recommendations and the expected growth next year, 54%, 17% this year. So that is huge. And if we go to the trading platform, you can look at the income statement, revenue, and net income growing year over year, as well as assets and liabilities. Good margin at 47%. So very strong. As far as valuation, let's go back. I think I jumped over that, but yeah, forward PE 28. And historically, you can see it was at 47.38. As soon as they come in with the next numbers, when over the next couple of quarters, this PE ratio is going to move up. And I see 200, then 250, then 300. So for the next 2-3 years, they're going to continue to do well. Lisa Su, the CEO, is excellent. So love this stock going forward. Let's jump on the trading platform. And I've already got 3 poor man's covered calls. So I've got deep in the money leaps and a put credit spread as well. But if I were to put this trade on right now, you can see as the stock price goes up, we make money. So I'll just go through real quick what I would do. But I would go to about a year out, September. I would buy the 160 call at the money. You could go deeper in the money if you want, but this is only 35 $100, and then I would sell against it. I would close that up, and then I would sell the November. And I've got the 180s right now at 37 delta. I would probably leave it at 180, and that brings the price down to $27.87, so $2,787. And we can collect $600 and $700 every month and pay off this poor man's covered call in less than 6 months. So from here, we would hit review and send and place the trade. But that's the trade that I've already got on, 3 of them, and that's my favorite trade for AMD right now. All right, guys, the next one, Amazon. It is a giant. It is more than just a e-commerce giant. It's a 3-headed growth machine spanning cloud computing, digital advertising, and logistics. And right now, Wall Street is still underestimating just how powerful that combination is. Cloud revenue continues to grow above 20% annually. Advertising is surging, and free cash flow is expected to double over the next 2 years. Yet the stock remains well below its historical value range, creating one of the most attractive entry points that we've seen in years. So I'm looking again for 30% upside from here and using put credit spreads right now to leverage that with options. All right, guys, for Amazon, you can see trading at 219 right now. 1-year target 266 that the analysts have on that are covering on Yahoo Finance. And so tremendous upside there still. And if we go to the chart, you can see trending upward. And again, not at the top end. It's right there in the middle. And my target for AMD is higher. Let's see. If we jump into the statistics, you can see the forward PE of 28, and it's been higher than that, and the PEG ratio of 1.97, so under 2 is good. And then if we look at the earnings per share trend, it's up. Growth 14% next year, 20% in the current year. So love this stock going forward. All right, if we break down the numbers and we fill in my price calculator. Actually, by the way, go ahead and ask in the comments below if you want this price calculator. I can send you the link. So just comment price calculator and I'll send it to you. But if we plug in the revenue numbers, 670 billion, you can see that is right here. The net income, 70 billion right here. 15% revenue growth year over year. And 20% net income growth, which this is very doable, conservative for these guys, then it puts a 1-year target of 238. And as of right now, we know the stock is trading less than that at 219. So that's kind of the breakdown there. Let's jump into the platform. Taste to Trade, link below. Check it out. Income statement, super strong, increasing revenue, net income. Same with assets, liabilities. These guys, they're dominant. So super rock solid balance sheet. I've got a put credit spread on right now, just one, and it's right at 220, 210. If we go to the trade page, curve mode, you can see it. We're in the profit zone right now. So I'll probably put another one of those on early next week. But just to dig in a little bit further on Amazon, they are obviously the king of e-commerce right now. 40% of e-commerce is Amazon, and it could beat. It's going to beat again, I believe, next quarter. But it's definitely a buy here. It's going to be a buy tomorrow. And as far as valuation, again, we just broke it down. So let's move on. All right, guys. The next stock is a master class in steady compounding growth. Costco. Its business model is simple but powerful and is built entirely on recurring membership revenue, which fuels predictable cash flow and rising profitability year after year. Membership renewal rates are above 90% globally. Private label expansion is boosting margins, and international growth remains a huge untapped opportunity. Even with its defensive profile, analysts still see mid-teens earnings growth ahead, yet the stock trades below its historical premium. So it's a stock that not only weathers volatility, but it compounds wealth quietly and consistently over time. All right, Costco trading at $9.15 right now. Target Yahoo has 1,061 with the analyst ratings. 52-week high was 1,078. My target is up there right at the 1,060 range. So it's another 10% up from where it's at right now. And if we look at the numbers, the PE is 45. It's been as high as 57. PEG ratio is 5.73, and price to sales 1.48. If we look at the last 3 quarters, they missed back in Q1, but Q2 and Q3, they're on a fiscal year, both beat, and you can see the strong buy and analyst ratings. Their profit margins are not huge, but they make their money on the membership. So 10% growth year after or quarter after quarter, year after year. What am I talking about? 10% for the year. And if you look at that chart, you can see bottom end again of that trending up range. So great time to get in. Now, as far as the catalyst for Costco, that customers, they definitely feel valued. I don't know. I belong. Do you guys belong to Costco? Let me know in the comments below. But I'm going to pay that membership every time because you know you're getting the best value, the best prices going forward. So they've got over a 90% return membership rate as far as signing up year after year. And they've got 914 warehouses worldwide. They've got a lot of growth for international expansion, and they're doing well internationally as well. And they've got the Kirkland brand, which is their more profitable brand, and it's a great value and it's less expensive. I guess the more profits, they pass those on to the consumer, so you get the same value for the same price. So exceptional prices. And the risk is really if consumer spending weakens, which I don't see happening over the next 12 to 18 months, and if international growth takes longer to scale. But I think it's going to scale. So you're going to pay 30 to 40 PE, and this is 12%. I think 17% next year is the anticipated growth. Well, they've got 10%, but 10, 12% every year. Growth and price target of 1,050. So let's jump on the trade platform. Again, I don't even know why I'm going through these balance sheets. All 5 stocks I'm covering today are super rock solid stocks. So we've got healthy income and balance sheets going forward. So if we go to the trades, I've only got to put credit spread on 900, 910. I'm going to throw another one on, may do a poor man's covered call, but you guys know how to set this up. It profits at, as long as it stays above where it's at right now. But I would probably go to November, and then I would put something on exactly like I have right now. You could even go down if you think there's going to be a pullback. You can go down to the 900, 890 and collect 348, a third the width of the strike. So $348 and hit review and set and place the trade. All right, guys. And finally, my favorite, the company that has multiple catalysts and it's basically printing money right now. It's, what do you think? Meta. Meta has over 3 billion users across its platforms. It dominates social engagement and monetization, and its AI-driven ad products are only making that moat wider. Revenue is growing double digits again, margins are expanding, and shares still trade below historical multiples, a rare setup for a company that is so dominant. Add in upscale from Reels, messaging, and new AI tools, and the long-term growth story is stronger than ever. It's a mega cap powerhouse with decades of growth potential still ahead. All right, guys. Last stock, my favorite, Meta. Here we go. 52-week range up to 796. We're at 710 now. We're going to surpass that here quickly. They've got a target of 1-year target of 867. Mine's much higher than that. Let's jump into the numbers. If you look at the income statement, revenue 178 billion, and if you plug those numbers into my price calculator, 178, 71.5 billion in net income, which is right here, and 17% and 20% revenue growth and net income growth, very doable. That puts the stock price at 1,009, so $1,010. That's what my target is. Now, if you look at the earnings, they beat the last 3 quarters. Look at all the strong buys and buys, and you can see that growth. Wow, they've only got 6.9. It's going to be higher than that, 17%. So let's jump on the trade platform. I've got a pending trade. This is a reminder for me for Monday to put this on. But before I jump into the trade, let's just real quickly go through some of the catalysts for Meta. They've got Facebook, Instagram, WhatsApp. They've got Threads. They've got the VR wearables and YouTube. Yes, YouTube. They've got so many different streams of revenue. They're dominating social media. They've been doing that. And they've got 3 billion Facebook users, another 2 billion on Instagram and WhatsApp. Even if ad spending slows down, people are cutting from Snap and some lower tier platforms, and people are spending the money. Companies are spending their money on Facebook and Instagram. So Meta is used globally, and WhatsApp is probably worth half the company right now. It's growing like crazy. So it is a super safe business, in my opinion. Let me know what you think in the comments below. But the forward PE of 27 right now is so attractive. But those numbers, the 1,010, I love. But I've got 3 put credit spreads in November. So if we go to the trade, you can go to Curve. Remember, check out Tasty Trade, but you can see my profit zone. So I do need to move up right now to be profitable, but that's because the stock's down right now. But look at the trade I'm going to put on Monday. Here, I'll just show you. I'll cancel this and we'll put it on again. I'll go to the trade page, table mode. I'm going to go out 1 year, 348 to September 2026. I am going to buy the 700 strike. It's 59 delta, 60 delta. I'm confident it's going to move up. So it's $116 basically. Times 100 shares, that's $11,600 to buy this if I were to buy it right now. And you look at the curve mode, just like owning the stock outright, 100 shares, you make money as it moves up. If we get up to that 1,010, that would put the value of this at 20 grand P&L. So I would more than double my money, 20 grand. So that's why I like Meta right now with the leaps. If I go back to the table mode, we're going to close this up. What I like to do is anytime I buy a leaps, I sell a short-term call against it. So I'm going to go out about 45 days, 47 days to expiration November. I'm going to open that up, and I'm going to sell. Calls are on the left, puts are on the right, an out-of-the-money call. I can go all the way down here to 800 and collect $1,400. Now, $14 times 100 shares is 1,400. That's going to bring my cost of 11,500 down by 1,400. So we're going to click on the left on the bid to sell it and watch the price go down. Boom, $10,185. So if I can collect $1,400 a month, $1,500, actually the $795, I can collect $1,500. I can pay this off. It's a little bit more than 6 months, but hey, this is a steady grower. So I'm going to go ahead. I'm going to put this, I'm going to go down to 100, put it below the market so I can adjust when the market opens. I like to open on a down day. Hopefully it's going to be down Monday, but I'm going to change this to good to cancel, 100. You can see my $10,000, 10 grand, and I'll just go ahead and send the order, and now it's pending. All right, guys, remember to like and subscribe down below. Download the free options workshop in the link below. There's a paid course as well if you want to level up your game. And let me know, what would you like to see in the next video? Let me know in the comments below. Are you interested in hedging? Because there's overvalued stocks right now. I'm thinking about doing a video on hedging and how I'm doing it to protect, since we're at high historically PEs and we're at all-time highs. So good thing to know about is how to protect our portfolios, right? All right. If you like this video, be sure and watch this next one.